Good evening and happy Thursday. Hope you're having a great week and staying safe in the markets. I just wanted to give a quick overview of a trade I took yesterday. I was experimenting with doing live recordings, with live executions, with the ultimate aim of possibly doing live streamings in the near future. Obviously, it can turn into a bit of a logistical nightmare because I've got a lot of irons in the fire. So please bear with me if I'm absent from the markets from time to time. Now, if you go back to my video from the 23rd of September about the UK government's fiscal intervention, I think my exact words were, it was quote unquote frankly insane, and I stand by that. Now, in the context of cable traders, I'm completely apolitical. I'm merely commenting on fundamentals and trading, okay? So I teach to be very aware of fundamentals and try to understand them to the best of your ability, but don't use them to fuel biases in trading for the most part. Why? Because you have to have a story in your head of where and why price is heading to be a successful trader. With that said, I'm a purely technical trader. Any of the predictions I make are based solely on technicals. Fundamentals, they're just for interest. Many years ago, probably nearly 10 years ago now, I did the Chartered Financial Analyst exams, which is a set of 3 6-hour exams to be accredited. It was absolutely brutal. Although it helped me understand global markets, like financial instruments and ethics and so on, I wouldn't really say it made me a better trader. Really, your best time is spent understanding technicals to the best degree possible. So the first recording, this was a straightforward setup one, break of key level, which was Asia low, and that was the 28th. I think the New York low to the 26th as well, and straight into an H1 demand zone. I'm gonna kind of fast forward this and see how it went. So it was a good trade. Nice entry. In fact, we'll go back, get a bit granular in the entry. We can see we swung down, broke some liquidity in a key level, formed an accumulation pattern, broke structure here, came back down, and formed this little structure, and then I took my entry when we retested this fair value gap. Speed it up. Now, so I was saying pretty clearly, if you go back in the chat, that my target was 1.1, but I ended up getting screen fatigue and took 27R. So it was good. I mean, I met my target, but unfortunately did not hold for the full 1.1. So if we go to my screen, I just did a quick search and we were saying dollars and distribution. Remember, it's headed to 1.1. I wasn't bullshitting, blah, 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 blah. But I mean, that's a 500 pip trade. I've never had a 500 pipper. That would have been 100R. So pretty insane. I obviously, kicking myself for not just leaving it and holding it overnight. But it was like, I got to about 5 p.m. and I had to get an early night. I was having like a flare up of a sciatica, like an annoying health problem. I ended up sleeping 12 hours straight through to the next session, believe it or not. So yeah, I was saying all week about the dollar and being in distribution. You can kind of go back in the chat just to see why I was thinking that we would head down here this week. So there's a few things to go over here. First up, cable traders. We have these subtext: volume, mindset, price action, key levels, and game theory. They're all extremely important. We're going to be covering a bit of volume tomorrow. I'd say the most important part is mindset and really being in control of your trading psychology after you've understood the strategy. The strategy is fairly simple. Game theory we'll introduce a bit later. That was my kind of master's thesis, and I'm trying to integrate it and make it try and make it make sense in the context of trading technically. We'll get into that very soon. So, I mean, in previous videos stated that there's always going to be haters because there's no proof of like what my trades are, so I've started doing that. I kind of need to put that to bed once and for all. So I've started doing both live recordings, live streams, and my FX book verification. So my plan was to launch a copy trading service. I've been testing on a dedicated server. What I've been doing is trading a 10k demo account linked to a 10k live account, and the lag is in nanoseconds, so the technology's working great. Of course, there's always a spanner in the works called FCA today, and I, as a company, would have to be accredited by the FCA. Despite being a former investment manager, I've managed institutional funds and individual funds. So I've plenty of experience managing others' money, but unfortunately in this context it can't really go as planned. So we will find a workaround. It absolutely needs to be above board though, it needs to be legal, and most importantly it needs to be ethical. The most important section of CFA when I did it was investment ethics. You can't pass the exam without getting full marks in that section. After all that said, we will find a solution, so please get in contact with me if you have any ideas on this. We only started Tuesday, but nice smooth equity curve. We're going to keep this fund quite conservative for now. In future we'll have even more conservative versions, more aggressive versions, and multi-asset versions, but that's all kind of coming down the line. So fundamental wise, what happened this week, just a really quick sketch. So say you were to draw like a pie chart of all the money invested in global markets. The biggest block of money in global markets is pension funds. So pension funds are extremely important when considering markets as a whole. So there's two sides to the pension: the assets, which is the investments paid in by the company and the employees, which is usually spread across asset classes. Let's say it's 60-40 equities to bonds. And then the other side is the liabilities. That is the annuities that will be paid to the pensioners when they retire. That's actuarial work, based on retirement age and so on, and like the average age of the company. So that's calculated by actuaries. My job was to fit the investments to match those liabilities. That was like my first job at university. So the main driver here is gilt yields. This is why I'm always banging on about gilt yields. Why is this important? Rising gilt yields means rising liabilities, because that's the annuity that will eventually be paid. Now, usually when interest rates rise, as sent by the Bank of England, this should create buying of gilts, and therefore a decrease in gilt yields. So when you get to the bigger pension funds, let's say like around $1 billion and above, they have what's called liability-driven investment overlay, and because there was a run on gilts, as you can see here, it's been going on for a while. Absolutely nobody wants to buy 10s. So big sell-off in UK government debt, the liabilities rose and the assets dropped because a big chunk of the assets are invested in UK bonds. So we had both an increase in liabilities and a drop in the investments. So it created a bit of a crisis with UK gilts, UK 10s now trading below par. So a lot of the bigger ones will have, the big pension funds will have what's called LDI, liability driven investments. So L&G are the main player in this section of the market, and they use leverage derivatives, so the assets match the liabilities more closely instead of just relying on a mixture of short and long dated gilts. which is the usual kind of split for smaller pension funds. Now, because of the running gilts, there was a series of margin calls on the pension funds from the LDI section. So the liabilities rose so much that the funds had to sell their most liquid assets, i.e. gilts, to pay the margin. So it turned into a kind of death spiral where there's actually no buyers of long-dated gilts and they drop below par. So the Bank of England, one of their aims is to ensure economic stability, so they had to intervene and start buying long-dated gilts, and that was the intervention. Not a huge impact actually, but it was enough to restore confidence in the market, I would say. I can't underscore how big a crisis this was. We were a day away from going cap in hand to the IMF for a bailout, believe it or not. So even being apolitical and maintain my stance, the unfunded borrowing was a massive miscalculation. And yeah, you can see the intervention didn't do a whole lot, and I think they're going to have to step in again. The next meeting is November, so I think the Bank of England are going to have to keep buying gilts. There's really no other way to avoid more margin calls on pension funds. So we'll see what happens. Very interesting times indeed. I've certainly never seen anything like this in my time in the markets, so we'll see what happens. So back to the charts. As you can see, only a couple of days, nice smooth equity curve though, so let's keep it that way. This is just a test until we can figure out how we can get copy trading working in the UK. We covered that trade in a video. Very easy, break a key level into demand accumulation, break structure, blah blah blah. 27-hour target for the week, very simple. Now we get into today. I kind of said I wasn't trading because just really my mind wasn't in it. I have a clear line in the sand in my head of when I know I'm in a good trading mindset and when I'm not. So if I'm not really feeling in the zone, I just won't trade. Plus I'd met my target. But I was still kind of monitoring things, and there was a couple of things that were interesting to kind of point out. A couple of good setup twos, I thought. So I'll just go into the 5 minute and have a look. What do we see? What we have is supply created here and a break of structure, right? And a retest of the supply. So you should be thinking, okay, it's broken horizontal structure into this H1 FVG, which deflected it and then ran into this M5 supply. So exactly as I teach. Then if we go into M1, sorry, this is a bit messy. What you can see is we had this raid on trendline liquidity, perfect. Come up to this M5 supply, break structure. That break of structure is shown on the footprint with this 18.0. So you have to remember that when you see a zero side imbalance, that's a break of structure. Okay, so zero side imbalances are a proxy for breaks of structure. Sorry, I'm changing the time frames here so much. I'm just trying to find the exact level on the footprint. Okay, so it was this 18.0, that's the structure broken, comes back to retest the structure, and you can short on a very precise level, and you can have a stop of a couple of pips. So people were saying, oh, you need 10-15 pip stop losses. I don't think so. I think you could have done this one with the standard 2-3 pip stop loss. So if we look again, hit of the M5 supply, broke horizontal structure, accumulation, break of structure, retest, and I think that was a 50 pip short and a raid on Asia low. 50 pips, take it below Asia low, or maybe you would have taken 30 or something like that. Now, I didn't take that. That was at 6 in the morning. I said I wasn't trading. I was kind of multitasking, but I did observe that. Now the next one, this is even more interesting to me because this is going to be the variation on setup 2. So you can see in setup 2 we needed confirmation here. We needed that break in structure and retest. But with this variation, we're talking about mini points of control or volume clusters. I call them VCs within an accumulation. Okay, so I have sandwiches here, accumulation below Asia low. We're at Frankfurt Open, so usually big moves at Frankfurt Open, and you can see it's starting to form structure here. And I'm looking at volume clusters, and I see this volume cluster here, which corresponds to here. So I point out this level. I call it a VC here. So I'm not in a trading mindset. I'm just saying watch it. It kind of clips it just and no more, and then rallies. So that's how you can use setup 2 without confirmation per se. You can just have the run up, which breaks structure, this beautiful compression, which touches the VC within the supply, and then huge rally. So we're going to be pointing these out a lot more in future for setup 2. It's just classic supply and demand trading, but using volume clusters to give a point of control, a precise point where you can take the trade. So this is one example of it. Break a structure, come down, touch the VC, and then what do we get? Absolutely huge rally, and we get up to our target of the week, which was 1.1, 320 pips. So again, very heartbreaking to miss that, but I tell you, these opportunities come up all the time in the market, and we're finding them all the time. You just have to have a really sharp eye for them. I was saying at the start of the day, I was really watching this weekly point of control. Okay, because we had this H1 demand created, and if you want to do a bit of Fibonacci work, you can say really we're wanting to come into this discount zone for a trade. So that's why I was a little bit kind of here and scared on this long, because it just touched the 0.382. It was on a little RBR, so I didn't really trust it, but you know what? It turned out to be a very good trade. If the market is turning bullish, then if you see the opportunity, it doesn't have to drop below the 50% zone. It's just, that's a better price to get it at. But if this is a kind of lesson, if you see the price action, then you can kind of go for it. And what was happening on DXY, again, you should always be looking at this. It made a run up below, above Asia high, above Frankfurt high, and then into this M15 drop base drop, and then started changing structure. So at this point, I was saying in the chat, I think we're not going to get to our weekly point of control, and it's time to look for continuation alongs. But it was such a straight line move on GU that was quite hard to catch. And also the gap, always be aware of these. If we are moving away from them, there's a very high chance they're going to be filled. So that fueled the long bias in GU. So unfortunately, I didn't catch any of these trades today. I said I wasn't going to trade. I just had too much going on. I'd met my target, but I'm not worried. Caught a couple of scalps here, just up and down like 30 pips or something, just to kind of bring up the copy trade account. I'm trying to get a kind of average of, I think, 5% a week on the account. So what we're at the moment, I'll give you the link to this. This is just the test, but what we're at 3% and started, should you see, so pro rata. If we get an extra percent by the end of the week, I'll be pretty happy, as long as there's no massive drawdowns. Let's keep it this way. So bear in mind, this is just a test. And we're going to try and find solutions for people who want to do copy trading in the UK. The SCA won't allow it, but we will find some kind of workaround, so bear with us. It'll be ethical, it'll be legal, and all above boards. And just, yeah, keep on trading. I think we'll find some good opportunities tomorrow. So I'm going to do some markups, and I'm going to wish you a great Thursday evening, and we'll see you on Friday the 30th. Last day of the month, so we're going to see some wild moves, probably a straight line move, up or down. We're just going to have to play it by ear. So yeah, have a great evening, and we will talk very soon. Cheers.